Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm your host, Harvey Freed. My co-host today, John Kolb. Hey, John.
Hey, guys. Thanks for having me. Looking forward to a great Michigan State win today.
Oh, yeah. We get to talk some sports and football to get the live broadcast here started on 97.1. We've got a great real estate mortgage show set up for you. Bradley Resnick over here. Hey, Brad, what's going on?
Hey, how are you? It's good to be here today.
I won't get into all the details, but I will. I'll introduce you the right way. And, of course, Evan Partridge, Berkshire Hathaway, Key... What do you call it? HomeServices?
Berkshire Hathaway HomeServices Key Realty.
You got a really, really long name there. That's good. But Berkshire Hathaway is easy to remember.
Try saying it like 5 times fast.
How about the Warren Partridge team?
The Warren Partridge team. You guys opened up a new office, and I finally got a chance to go over there, and it's really cool. It's
great
really,
little space, isn't it?
Yeah, it's a great space. It's off of Northwestern Highway, and well, definitely anyone who might be interested in getting into the real estate profession. They do a lot of great things, including I think you guys will even help them get their license
Absolutely.
and all that kind of stuff.
Yeah,
so
we got a lot of great stuff going on. Recruiting hard to the office. It's a good time.
We got great training programs too. We're very team and family oriented here. So if you want like a fun environment, stuff like that, be able to have fun and make some money. Come and join us.
Yeah, and give some service to obviously people that are selling and buying home. I went to one of your open houses. There's like 3 of you guys there all the time. So we'll get into all the different homes that are in the marketplace now. John, you and I have been busy. For some reason, in the mortgage industry, I'm going to say over my 35-year career, September and October are always busy. Sure enough, again, we're busy again.
It seems like the fall always brings people out that they want that dream of a home for the holidays. So they jump on it on the last second. August, September, October, like you're saying, to be able to be into the home by Thanksgiving and Christmas and to enjoy what a new home looks like for the holidays.
Yeah, that's really fun, too. I'm glad you mentioned that. We are definitely in holiday season. Next Friday, already Halloween, and then before you know it, you got Thanksgiving, and, of course, Christmas and all the other holidays that we celebrate towards the end of the year. We take your calls all morning long at 248-539-9797. Tons to share with you. Of course, the mortgage rates have come down. It's brought maybe some of the other folks that were on the sidelines, John. Maybe they're out there because these guys say they're busy. Their phones are ringing and they're working with a lot of buyers, but definitely a little bit lower interest rates.
Yeah, I think we still have an inventory problem,
Yes.
right? I mean, don't you guys think? And I mean, the interest rates are ticking down, which is a good thing. But the number one thing is finding the good home that people want to jump into. So are you guys... Are you mainly dealing with buyers, sellers, kind of 50-50 right now?
We deal with both, but to be honest, we were just talking about it. Usually this time of year for us, things kind of slow down. We've gotten a lot of phone calls in the last couple of weeks of people wanting to list their places. Lots of condos, not quite affected by school year and stuff like that, but we got some really great places coming on the market. We got a couple open houses this weekend. Things are good.
I'm glad you mentioned condominiums. Yes, great for a lot of families, young people sometimes even looking at those because they're not home, they're out and about, traveling in a small condominium. Seems like it's really priced well. The overhead's not a lot. Those association fees do jack up the price, and it takes away a lot of buying power. We'll get into that also this morning. But a lot of great condos. Brad, you've seen them all around Novi and all around the Southeast Michigan, right around $200 to $250. Really starter home prices.
Oh, yeah, I completely agree. The ones that we got coming up are great. We got a couple of great starter condos coming up in West Bloomfield, which is really fantastic. But I'm seeing kind of all over the map, too, really. But what's really great right now is my buyers are, once these interest rates get too low, there's going to be so much competition on these houses. So right now, my buyers are able to get the houses at the prices that they're putting in their offers at.
Yeah, more and more buyers are definitely winning.
Yeah, Brad brings up a good point. I mean, once interest rates drop, you're going to have more and more people flooding the market to try to purchase homes, which is going to also be a problem because what we just talked about, there's not enough inventory. Hopefully, with the interest rates coming down, it'll cause people to want to sell now. Nobody wants to sell their bigger home to downsize to a smaller home to double their payment. It's just not in the cards.
Yeah.
So, for anybody that is looking to downsize and or make a lateral change and try to keep the payment the same, we're never going to get the rates back into 2s or the 3s. They're just not coming. And we don't want them there because that causes all the other issues that come along with the economy. But can we see rates in the 5s, the low or the high 4s? Absolutely. I think you'll get a lot of people off the fence at that point.
Yeah, take your calls all morning long, 248-539-9797. Biggest challenge for buyers was their interest rates in the inventory, and definitely the interest rates are not the issue anymore, but the inventory. So I thought that the supply seemed to pick up a little, and I do see like some of the fancy names out there in real estate all across Southeast Michigan, more as I'm driving around. I'll see a sign, and it's still up after 2.5 months. So, there are some people that don't price the home. I mean, they hire the great agent. I don't know, maybe they put a nice video together and they get the house all set up, but they throw a price out there and it's maybe just sort of fishing for something to see what happens. But I would feel like if I didn't get my house off the market in 2 months, like what's going on there? Why are homes sitting? Like some of these homes are just sitting there.
I think the market is changing. Okay. I mean, I think we've seen that, and that's why you see places sit. You see some price reductions where in the past we hadn't really been seeing that. So I think that's proving to you that the market is changing, and your pricing is extremely important. I mean, it's probably the most important thing you can do when you put a house on the market.
I also think that sometimes you get yes realtors. You know what I mean? Like their client.
I was just going to say
their
this.
client or is going to dictate to them on what the price of the house should be. Well, you're the professional. We know what these houses are going to cost. We know how to price them, but sometimes these realtors will price them at what their clients want. And that's not what the house should sell at or what will appraise at. So it'll sit on the market longer and longer. You got to be firm sometimes and say the hard no and be like, listen, I know what I'm doing, and this is not, your house isn't going to sell for this amount. If we sell it for this, we'll get more competition, more offers. We may be able to get a little bit higher than what we're setting it at if we price it right. Then that house shouldn't be on the market longer than a week or two.
Yeah, I agree. I was going to say the same thing. You're doing a disservice for the whole entire market by letting someone dictate and list high when they're not going to get it. It's just you're not making the comparable sale that's needed for other appraisals. And like you said, it's just going to sit there and you're never going to sell, and you're just losing money each and every month.
Everyone's motivation is different. Again, maybe some people say, look, I want the house sold by the end of the year. So they might start a little bit higher, let's just say in September, August. Again, I saw some lake properties as I'm cruising around the area, and I'm like, that house has been there. That sign's been up for 2.5 months, even since August. Maybe at the end of this summer, a lot of the people that are on the water, they said, look, I'm ready to go for whatever reasons. I either want to downsize, upsize. Maybe they're just moving out of the state. But they listed at X, and then let's just see what happens. Let's just see what happens type of attitude.
But what's the first thing that you think of when you see a house that's been on the market for 180
What's
days?
wrong with it?
What's wrong with it?
Exactly. So, your theory of, okay, let's put the house on for a higher price, see if we can get it, and let it sit there. You're creating a negative conception out there or negative perception out there for all the buyers out there saying, like Evan just said, what's wrong with the home, right?
Or what's wrong with the people? Are they not easy to work with? Because sometimes that can kill a deal too real quickly.
Well, yeah, absolutely. But if you want the home, and thankfully you've got the real estate agents that are the in between people to be able to stay away from the seller or the buyer, keep them away from each other, I should say, and not have to worry about that. But yeah, I think what's wrong with this scenario, right? With this home, why is it on the market for so long? And you just don't want that. And everyone's like, well, I'll take it off. And how long does it have to be off the market to relist before and show a new date?
A month.
A month.
Yeah.
So that's 30 days of good looks out there, especially right now with how busy everyone is.
Yeah.
And then when you're pricing it wrong and it sits on there for so long, then you're losing out another month of potential showings. And then what happens? Another house on the same block where you're selling that house goes up for sale, and then that thing only sells in a week or two because it was priced right, done right, and this house is still sitting there.
Yep.
How much knowledge we gain by just that simple thing. Your house is on the market. It hasn't sold. You're not getting a lot of offers. Lots of showings, not a lot of offers. Usually dictates a price issue. And then the one down the street, and again, who knows if they're extremely comparable or not, but that one sells a lot quicker. I mean, look, the home prices continue to rise on an annual basis all the way through August, according to the national numbers, of course, although we're not getting any data right now because the government's under the shutdown. But the price gains are shrinking all across the country. But we are seeing pricing is gaining in Northeast, in the Midwest, and weakening in the South and out West, which is good if you want to retire, I guess, now, John. If we want to start a place in the Tri-County area and move down to Florida or Texas or somewhere, maybe the prices there have definitely been softening.
Absolutely, but look at the insurance costs out there. I mean, that's why people are moving away from those areas, California, Florida, the coastal, the Carolinas, even Texas, with the hurricanes that are coming through in the years past. Let's hope that everyone's safe this season, but we all are going to see our insurance premiums increase
I
because
used to always want to live on an ocean,
Right.
but after
Until-
like the last 5 years, I'm like, you know what? I love where I live. I love the state of Michigan. It's a fantastic place to move to.
From someone who lived in California for a long time too, right?
Right.
You love it here. People just move back here.
Everybody I know, when I was younger, getting out of college and everything like that, everybody was moving out of Michigan, right?
Yeah.
And now everybody's starting to move back.
Right. They
I'm getting
realize
calls from people all the time, like, "Hey, Brad, it's been a while. I see, you've been in the real estate game for a while. Help me find a house." And they're in like Texas, Arizona, California, someplace out west where rates are higher, and the weather is, here you never know. In the middle of the winter,
Right.
you can, snow blow your driveway in your shorts.
Right.
You
could play golf in the morning and ski in the afternoon, right?
Exactly.
Well, new listings usually drop in August and September, as we mentioned, but as much as that's true, it's only down about 2%. Now, it used to be like 9%, Ev, as you said, that sometimes this becomes a slower time of the year, but definitely a lot of listings coming up. In our second segment, we're going to talk about a couple of the homes that you guys have on the market right now, what listings are coming up, and why there's some value in some of the different homes you guys are looking and have listed. Lots of open houses out there. It's 8:11 if you're just joining us. The Hardcore Mortgage Real Estate Business Show will take your calls, 248-539-9797. We'll be right back. All right, welcome back to the show. It's the Hardcore Mortgage Real Estate Business Show in our 25th year, giving you some great information on mortgages and real estate here, especially locally. Well, John, we're in all 50 states, so you can get a mortgage with us in any state you want.
Yes, it's a new revelation for us. We've certain individuals were always licensed in different states. Every state that they wanted to be licensed in, you have to do your yearly Con Ed. You got to pay your yearly money. But recently, we have expanded to all 50 states for every loan officer in our office. So it's great news.
Yep, and we are sponsored, of course, by Capital Mortgage Funding. That's where you can reach John and myself at 1-800-LOW-RATE. We're here in your old backyard, 1-800-569-7283, powered by CMG Home Loans, NMLS 1820, Equal Housing Lender. Our special guest today is Bradley Resnick and Evan Partridge, Berkshire Hathaway Home Services. And again, it's fun to talk with you guys. It's really a local vibe. I've known Evan for a very long time. And we always get to close a few transactions together, Ev.
Yep.
Had a first-time home buyer recently. That was a lot of fun. But let's talk about some of the up-and-coming listings you guys have. I just like to put a little barometer on what's going on locally and talk about specific properties and what you guys see, why there's some value there and some different price ranges. So go dive in with one of your new listings.
Well, let's talk about the ones we're going to do. We got a couple open houses this weekend.
Oh, good.
Two tomorrow, really close to each other, both condos.
About within a mile from each other, so you can easily go to one and then pop right over and see the other one.
Nice.
So the first one is 7975 Woodingham. It's at Maple Place Woods in West Bloomfield, right across from like Home Depot, Applebee's and all that.
Yep.
It's a 3-bedroom, 4 full bath condo.
What?
How often do you see that?
Yeah, 3 bedrooms alone is hard to find.
Exactly.
Okay.
So 324,888 is the price. I mean, it's
Nice-
a beautiful
nice round
place.
number.
Yeah, exactly. That's our shtick.
We like our eights.
1,800 square feet with a full finished basement. It actually has a salon in the basement. Really, really good shape. Great place. Brad, why don't you tell them the one you're going to be at?
So I'm going to be over at in Greenpoint off of Hunt Cliff. And great house. It's got 4 bedrooms, 3 bathrooms, 1,450 square feet. It's a ranch level condo with a beautiful basement, a great walkout, completely redone in the basement area. It looks really nice.
You guys got condos with 3 and 4 bedrooms in them, in a good area with great schools and a lot of amenities, as you mentioned. Have you threw out Applebee's? I mean, that might have triggered a whole bunch of folks out there. I think I've eaten an Applebee's maybe once or twice, but
It's
the
right across
commercials
the
are bringing
street.
me in, man. They're dragging me in on those commercials. That's
I
right.
think
about
you
these-
lost Harvey on the one for the salon though.
Sorry about that.
There's no need for him to get that condo.
For those,
They
watching on
might
Facebook.
do head shinings over there too. You know,
Right,
they'll
yeah.
shine your head for a nickel.
Brad, how much was that condo again? It was 1,450 square feet. A ranch, though.
374,888.
Okay, 374,000 and change. You can get a 3-bedroom condo. That's with Farmington Hills Schools. Crossroads on that one. Is that 14 in Halstead?
14 in Halstead.
So really great area.
Yeah,
And again,
the location's great because you've got a bunch of restaurants right over there. You also got access to the freeways, to quick shot to go downtown or out to Royal Oak or wherever you want. But it's a great school system, great neighborhood in there too.
yeah, we always talk about where's the value in this, but that is the location is just outstanding to be in any metro area. But we're seeing these across Southeast Michigan, whether they're houses or condominiums, but definitely opportunities out there. John, mortgage rates are making it definitely more affordable. And we talk condominiums. It's a lot of buying power. That's one thing. And for the other folks out there, a lot of times with first-time home buyers, I'll say to them, you know what, let's take a look at some housing. And the reason why is it's your first house. You finally have the freedom to pick your colors, to do what you want outside, to put a garden outside. Sometimes homes versus condos, you really need to cross your boxes off and figure what's going to fit your needs.
Yeah, I mean, there's a house for everybody, right? So condos are fantastic, great, and but like Harvey said, you got to worry about the buying power with sometimes first-time home buyers because that monthly association fee can really dig into what you qualify for. For example, I've got a client right now purchasing a condo, and it's $430 a month for the association dues. If you think about every 10 grand gets you about $65 a month. $65 a month more or less in a mortgage payment. $430 is really digging into what he's going to qualify for in terms of going out there and purchasing a home.
Right, because the property taxes vary a little bit, but right, you're talking about $40,000 to $60,000, even $70,000 worth of buying power if you don't pay the association fee. Now, okay, so you got to cut your own grass or hire somebody. John, you're a homeowner. I cut my own grass still. It's not. I don't have acreage, obviously, but it still takes an hour and a half. You can hire someone relatively inexpensive. A lot of first-time home buyers are out there a lot, whether you're male or female. You know, some of these tasks you don't want to do.
Right.
But you can hire someone pretty inexpensively to maintain a property or even the snow removal.
Yeah, I mean, that's what we always talk about, that if somebody wants to be at a certain price and they don't qualify, but they're looking at condos, you might want to steer away from condos at that point and start looking at some homes and thinking about how you can outsource some of the tasks that you don't want to have to do. But for condos, you don't even have to worry about hiring anyone, right? They've got, you know, the HOAs taking care of all that, and you just show up and it's all done for you. And then you don't have to worry about the exterior insurance as well. You're only having to worry about the interior, which is a great thing and a great learning tool for someone who hasn't purchased a home before. Okay, let's start easy. Let's start simple. Let's start with a condo and go from there, because I know that I only have to worry about the drywall in, everything in there, and maintaining that. Everything exterior is on the HOA.
Yeah. One of the things, you want to jump in?
It's kind of nice. In a condo, you're kind of buying a lifestyle.
Yep.
You know, it's not just, you know, whatever the payment is per month for lawn care, snow removal, that type of thing. It's just, you know, knowing you can go away, not have to worry about it. You know, if somebody can't afford a condo because of the HOA fees or whatever it is, I try to get them to, like, let's do a condo alternative type house. Something that doesn't need a lot of maintenance. Maybe it's a lot of brick or vinyl or aluminum, you know, things you don't have to paint. You know, you walk up to a house, is the roof looking good? Are the windows good? All the big ticket items done. And then, you know, okay, I walk in, I shouldn't have to spend a lot of money on this house other than decorating, and you're good to go.
And there's a lot of need for condos right now, too. As I'm noticing with, you know, people like my parents' age, and as they're getting older and they're living in these beautiful houses that, you know, have stairs up, stairs down, stairs, you know, all over the place, you know, I'm starting to see that a lot of people, you know, around their mid 70s they don't want to cut their own lawn anymore. They don't want to snow plow anymore, like we're talking about. They don't want to have to deal with anything. They just want to live out the rest of their years,
right?
You know, in peace and not have to do any of that stuff. So getting some of our parents and some of the older people out of their bigger homes and moving them into these condos, that's where I'm really seeing a lot of the need right now. As far as where the condos
and you mentioned it, you know, over 70 years old, lots of equity. They might have lived, your parents even, for example, might have lived in their home 30 or 50 years. So they're typically in a situation where when they sell it, they're going to be cash buyers on the next place.
Right.
It doesn't really help us in the mortgage world. Hey, some of them want to invest the money and let the money grow for them, and they pick up a small mortgage.
And I'm noticing that in a lot of my listings too, because what I will see is that, you know, I'm showing somebody a house. Oh, why are their taxes so low? Well, they've been in the houses for, you know, 30 years, and now they're getting ready to move to a condo and downsize a little bit.
Yeah, the only thing with condos is on the mortgage side, we got a little bit more work to do. And I know that you guys probably know this as well, that, you know, we have to make sure that you're not just approving the borrower and the individual unit itself. You have to then get the whole complex approved. And more and more condominiums are not going through the FHA approval
How about
phase.
none? It seems like.
So
I
the good
haven't
thing
seen
is
any.
we've got a great condo team at here at Capital, and we are able to spot approve some new places that don't want to
FHA
go
spot
through.
approval.
Right.
Yeah, tell us more, John.
So, and you just have to, you have to get the budget, you have to get the master deed, and we have to submit it to our committee to make sure that the association is, and then you're spot approving that individual unit for FHA approval. And it's a great option, but it's not always a guarantee. Right? And you have to get all the homework, get all your info on the front end, the condo questionnaire, the budget, the insurance, the bylaws, everything, so that you can make sure that you're doing your due diligence.
If you're a young buyer, if you're an older buyer, it's so important to be in a position to get a conventional mortgage, right? Because then you're available to get any mortgage on any property you're going to find. Except maybe a non-warrantable condominium or something a little off the, you know, where there's a commercial building downstairs, a one-off,
right?
A mixed-use property. Those become a little interesting. But FHA has always been a great outlet for folks with lower credit scores. And a lot of times, it doesn't matter what age you are. If you didn't take care of your credit, if you got too many accounts and you're dipping into the low 600s, you're pretty much nowadays into an FHA mortgage. Conventional mortgages, John, we see them, the cutoff somewhere, it's definitely above 680. And more importantly, that's a higher loan to value or a more down payment, obviously, a higher down payment.
Yeah, well, you can do a conventional mortgage all the way down to 620, but you're really going to pay for it. I mean, the loan level pricing adjustments that are put in place by Fannie Mae and Freddie Mac are going to hit you up. But the more you put down, the better it obviously will be for you. But if you're looking for a lower down payment, 3-5%, you got a 620 credit score, 600 credit score, 580 credit score, yeah, odds are you're going to be in an FHA loan or VA if you're a veteran.
Yeah. Mm-hmm. Can we talk about that a little bit?
Sure. Dive
VA,
into it.
FHA compared to conventional. I mean, I think there's like a stigma out there that these loans are difficult. And if you have a buyer that's putting an offer on a place, like they're going to be a problem for a seller.
Oh, geez, yeah.
I think that's garbage.
It's the old problem was the appraisal, right?
Right.
Oh, we don't want to. It's not going to pass an FHA appraisal. What do you mean? FHA and conventional are pretty much the same. VA is the same. The only thing different with VA is that you have to have a pest inspection.
Pest inspection.
Right.
Whoop-de-doo.
Yeah.
I mean, it's simple.
I think that might be a good thing to get anyways.
I just had one that closed under 30 days, VA loan. I mean, people think that they're so difficult. It's like you got all these great programs to help buyers get into either whether they're first-time buyers or whatever. And I'm sick of that stigma of like these people are going to be tough because they're getting this type of mortgage. If they're pre-approved and you guys have done the job that you're supposed to do what you do, they're good to go.
And I brought offers to some of my sellers, and they're like, "Oh, we don't want to entertain this offer because it's an FHA." And I'm trying to explain, it's the FHA loan is not a bad loan. This is going to help them get, be able to purchase their house.
But it's a lack of education is what we find typically. Right. And hey, I just made a bet with somebody that I think I should have won. Hey, I told a guy if you take our offer,
hopefully it wasn't Chauncey Billups.
No, it wasn't. Exactly. Nice job. But I said, look, if this doesn't close, I'll give you $1,000. Sure enough, 25 days later, we're at the closing table for a veteran, and really we should open our eyes up and allow anybody to get any type of mortgage. If you're a listing agent, you call, you make the extra phone call.
Absolutely.
If you're one of those agents that don't talk to anybody, that's a whole different issue. Hey, when we come back, we're going to dive into a little bit more FHA, all these different mortgage programs available. Which one fits your needs? 248-539-9797. We'll be right back. Alrighty, welcome back. It's the Hardcore Mortgage Real Estate Business Show, 8:30 here in Southeast Michigan. We take your calls at 248-539-9797. We got a call coming in. Let's go to the call to get us going here. Paul, if you want to plug in. We got Glenn calling in from Detroit. Hey, Glenn, good morning, and go ahead with your question.
Hey, morning. Yeah, quick question for you. So, I would say years ago, I purchased a home out in Maryland when my job transferred me out there, and I was married there, and I've since gotten divorced. And so she has the house now, but she didn't get the house. We decided, in the agreement that we're going to sell the house a year after our son graduated from high school. And I purchased that house under the VA loan. So, because I'm a veteran.
Yeah, good for you. And thanks for serving.
Thank you for your service.
I appreciate it. So, I guess my quick question is, she had asked me if I would be open to her buying me out on the house so that she could, I guess, keep the VA loan because she thinks it's more expensive to try and get a home now with, I guess, rates, but she wants to keep whatever it is. But I guess the downfall to that is I can't use the VA loan, I guess, until that one is closed out again because I do want to buy another house. She's
not a veteran, right?
Well,
no, she's not a veteran, but but we purchased that house together under my VA loan.
So the number one thing you're going to have to call your current servicer because VA does allow for assumptions, but I don't know how that works if you're assuming it from a veteran to a non-veteran. So you're going to have to call your servicer to see if they're going to want to do that. The other thing is that even though you have a VA loan currently, you can still get another VA loan. You have your entitlement papers that we can do a calculation based upon how much of your entitlement is used versus how much is still available to find out how much you qualify for on a second VA loan while you still have the first one. Now,
oh, really?
Yes. So, and that's
okay.
something you give us a call, we can figure that out.
Yeah, you definitely can get a second VA loan. I like the idea that we sort of take a look to see if she could refinance. I'm sorry, if her name's not on title to the house, perhaps she could just go ahead and buy it out from you. John, can you do a gift of equity to your ex-wife? Maybe you can, right? Can you? Maybe not.
Everybody's going to be a little bit different about that.
So there's lots of different opportunities out there, Glenn. We'll dive in a little bit deeper. But I think, John, the one thing that I like what you said is, you definitely, if you already have a VA mortgage, can you sell that house and get another VA? The answer is yes. The VA funding fee ends up getting to be like 3.25%. That could get a little expensive. I still like the idea your second time around, just because that VA funding fee goes up, John.
Well, but the VA funding fee has an opportunity to be exempt as well. There's a lot of things behind that, but just give us a call. We can run all those numbers for you.
Great call,
okay,
Glenn.
I appreciate that.
Yeah, we'll follow up with you. Thank you so much. Again, we do make these calls after the show, and we dive in a little bit deeper to find out. You brought up a couple things, right? Because a veteran who is disabled, they can not only waive the VA funding fee, but a lot of times the cities don't have the property taxes. The property taxes are waived for veterans that serve.
Yeah, every city's different for that, so that's not a guarantee. But you have to investigate to find out, whether or not you're going to have to pay that funding fee, because it depends on the percentage of disability that you have going on. Obviously, we never want to hear anybody being disabled from being a veteran or at all. And, it's a tough thing to bring up when you're talking to a client. Say, hey, is there any reason why the VA funding fee should be exempt for you? And, you don't want to hear those things, but at least it is a benefit for some people to help them save some money on a monthly basis and for their mortgage.
Great
Most
program.
definitely.
What a great question. I mean, that just shows you how much you need experts on your side. I mean, there's a lot to that question.
We take the extra step because we just don't see these things every day. Yeah, we might know the guidelines backwards and forwards, and then sure enough, we'll double check that for you. And there's just a million angles on a mortgage. If you guys knew what we did behind the scenes, it could get a little stressful.
You could talk to that guy for an hour. Easy.
Yeah, easily. 248-539-9797. We'll take your calls up till, of course, 9 o'clock. Pat Caputo, he comes in after that. Then we're going to have Mark Ryan, 1 to 4. Jeff Rieger leads us into the Red Wing hockey game tonight, which is going to be broadcast here on 97.1. And, John, there's a football game in town. I guess up in Lansing, you guys are going to give it a shot, eh?
Well, Harvey, it's East Lansing. But, yes, we're going to give it our fighting chance. I mean, it's obviously the odds are not in our favor. But Michigan State always comes out with a chip on their shoulder, and hopefully we can.
I love these games.
It's a lot of fun.
It's a lot of fun.
Going up to the tailgate, which is we're going to go up for a couple hours, just because you get to see so many different people that you haven't seen in such a long time from both schools.
Oh, definitely.
We all have friends that went to both schools, and they're great fans, and so getting up there and having the rivalry and having a hot dog next to your buddy is always a good time.
It gets pretty crazy in our family. My niece goes to U of M. My wife, went to Michigan State. So, we always have a lot of fun in our household when it comes to those games.
I don't have a horse in this race, but I'll tell you what. I always took the side that if whatever team's doing better, whatever team is doing better, that's the team I want to win. If they got a shot back, it used to be if they got a shot of going to the Rose Bowl, I want that team to win. So
Your brother went to Michigan State.
I'm a Michigan State guy, so I'm always an underdog guy.
That's good. All right, we're going to take your calls here, always on the Hardcore Mortgage Real Estate Business Show. Again, Evan Partridge and Bradley Resnick joins us, of course, here from Berkshire Hathaway. Always want to share some great information with you. We're excited in the mortgage industry, and everyone across Southeast Michigan obviously is, as mortgage rates have dipped again in the low sixes. Again, everyone gets a different mortgage rate based on how much money you're putting down on a house, John. So important to know that, what your credit score is. And I'll just touch on that a little bit. So important if you're thinking about becoming a homeowner. Don't wake up tomorrow morning and say, hey, I'm going to put my feet in the water. Test it out a little bit. What you need to do is make sure that your credit is up to snuff. Anything you can do now, if you're thinking about buying in the spring or summer, is very, very important.
Get yourself pre-approved.
Yeah,
I can't tell you how many times that I have talked with people and they're like, oh no, my credit's great, everything's perfect, da 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 da. I don't need to get pre-approved. You get to the process and they go to apply for the loan and they get denied.
Yeah, I talked to a guy yesterday who referred to me from a real estate agent. He had already been pre-approved at a bank. But we dove into it a little bit. I think we talked for like 40 minutes while I was driving from one appointment to the next, and dove into it. And he's like, well, yeah, I don't have any credit. I don't have any credit cards. I paid my car off, and my score has dropped from 680 to 630. And I'm like, well, the reason is because your credit's stagnant, right? You have no activity going on, and once you have no activity going on, you're going to lose your credit score altogether. Then nobody can do a loan for you.
Right. Some people think that when just because I only have one credit card in my name, my car is paid off, and so my credit should be perfect. Well, you don't do anything on it. Right. You don't have anything to show your credit. You just. Right.
So, we put a plan in place yesterday to try to get his score up from that 620, 630, because he has 20% to put down. He shouldn't be looking at an FHA loan with 20% down. He should be looking at a conventional loan. So we have a plan in place to try to get his score to pop up. And, so we're going to work on that with him. And that was the initial call. We went 45 minutes. We went into that, and he's like, wow, this other guy didn't even tell me anything about it. And I said, well, odds are he doesn't know anything about it.
I had one of those calls too, John. I'm still shocked. Here we are in 2025 that some of the people you're calling, folks, if you're clicking buttons, you better dive a little bit deeper than that. And let me just throw it out there. 1-800-LOW-RATE. You can call Capital Mortgage Funding. Everyone in our office has been there forever, 20 years plus. Deal with real experienced people. The real estate agents that are qualified, they don't want you clicking buttons. They want to deal with the local lender where they can pick up the phone. You've been in my cell phone for years.
Absolutely.
It's just so easy. And that way we break things down because your seller is probably going to buy another house. And that chain reaction that you got to be able to position yourself to close within 30 days.
Absolutely. Mm-hmm. Yeah. You want to have these conversations early, often. Communication's super important. This is a complicated process, but it doesn't have to be that way. If you can kind of make a science out of it the best you can, get the pre-approval letter early, figure out, not only what you can afford, but what you want to afford. Just because you can get a pre-approval for $500, but you like the payments better at $400, make the right decision.
Right.
And listen to your professionals. Listen to your realtors. Listen to your mortgage professionals, because that's their lane. That's what they're in. I'm not going to go and try to answer mortgage questions. I'm going to go say, give my friend Harvey a call. He's going to answer your mortgage questions. Get pre-approved. Come see me, and we'll get you into the house that you want.
Yeah, there's no charge at all. Again, do not give your money away. If you're just calling willy-nilly people and they're asking you for a credit card or anything like that, do not do that. Pre-approvals are free. They cost us, the lender, a lot of money now, especially the cost of the credit reports have gone up. So they cost us money. In the long run, we would much rather have you set up for success. And then we can tell that listing agent on a Sunday afternoon when highest and best offers are coming in, John, that we've already vetted this buyer. They can close within 30 days.
And that's what I was going to say. What as a listing agent, how important is it for a quick close sometimes? And if you're not pre-approved and you haven't submitted your docs to your mortgage professional, then how are you really pre-approved, and how are you going to get a quick close? So we make sure that we get people's docs and we get everything, and then they call us up and say, hey, can we close in 14, 20 days? So for this client, absolutely you can. I've already got all the assets tracked. I just now need to get homeowners insurance, proof the EMD cleared their account when you cash it in, and we'll get the appraisal ordered on a rush.
It's amazing how quickly you can get things done when people get their ducks in a row.
When they're prepared, right.
Mm-hmm. Can I ask one question about the person you had that had stagnant credit? Because I'm sure there's other people listening that have that same type of a problem. And I know everybody's situation is different, but with that person, how long was it going to take them to get their credit in a spot where they could get the mortgage they wanted?
So I'm not going to give away all my secrets, but if you were to open your own credit card and wait, it could take 4 to 6 months for your credit score to pop back open. I have a trick with it's not an illegal trick or anything. It's just a thing that you can
not
do.
Chauncey, because you dropped it a bit. Not Chauncey trick. It's Chauncey trick.
That's
different. That's a whole different thing.
Where we can get your
You want to
credit
play poker later?
Right. We can get your credit score to pop in about 2 to 3 weeks.
I mean, that's fantastic.
Yeah,
really.
And
That's great.
without that phone call that they made to you, they'd have no idea.
He had no clue.
Yeah.
And so we're gonna put that plan in place. In fact, he texted me last night that he already started it, and it's just a little trick of the trade to get your score to pop. And then at that point, because he can go out and get his own credit card after we close on a home, right? And then start to build your own credit back up so that you're doing it the right way. And even though you have a credit card open, he didn't like to use credit cards. So even if you have a credit card open and you're not using it, that's still stagnant. Right? There's no activity going on. So we always tell people 1 tank of gas, 1 meal a month, charge it to that card, $50 charge. You want a high limit, $3,000, $4,000, $5,000 limit. You don't want to be anywhere close to that limit with your balance. Let that charge sit on the card for the entire month, and I always say let it marinate for the entire month. Credit cycles twice a month, so you'll get 2 cycles of low debt, high limit, good credit. And then it'll pop. And then when you get that invoice in the mail, the statement in the mail or the email, pay it off in full, grab the card, do it again.
All right, if you're listening to the show, it's a Hardcore Mortgage Real Estate and Business Show. We're going to dive into that because we continue the conversation about credit. 248-539-9797. Not everybody out there, again, don't get yourself in credit card debt. That's not what we're talking about ever on this show. What we're talking about is using credit in a very, very conservative way. And like Judge John mentioned, charge up a few things, pay it off at the end of the month. When we come back, we'll dive into that a little bit more. And we got a caller, Mike, calling in. So we'll get to Mike's call right after this break. Keep it here on 97.1 The Ticket. We'll be right back. We promised we would get into some debt consolidation, refinancing your mortgage, and all of that, and we're definitely going to do that. Take your calls at 248-539-9797. It's the Hardcore Mortgage Show. We got caller Mike calling in from Clinton Township. Hey, Mike, what's going on?
Hi, guys. My wife and I recently retired this year, and we were wondering, she gets a small pension. We haven't started collecting Social Security yet, so no, true monthly income. How would one apply for a mortgage? Because we're looking at possibly, we're just discussing the possibilities, moving, getting a place down in Florida or getting a place up north and that. And I was just wondering how you go about getting a mortgage without an income now. I've always had a job.
So, we can use your pension. And two, well, first, congrats on retiring. I mean, that's the dream for everybody, right? So,
Can I retire?
Yeah, I mean, seriously. But
you have to get old to do it, though. That's the problem.
Yeah, that's true.
I'll be lucky when I get old.
Yeah. Well, the good thing is nobody's older than Harry, and he's not here, so I can make fun of him. But no, you can. We have what's called an asset depletion loan. So basically, we can take a look at your assets, and we can use them as a monthly source of income based upon how much you have and what kind of loan you want to get into. They deplete the assets over a certain period of time. They give you a monthly income stream. It's nothing you actually ever have to touch, anything like that. It's just our way of calculating based upon what you've saved, how we can use that for monthly income now that you're of retirement age.
So an asset depletion loan, John, is one thing. A lot of retirees obviously sell their current home, use that to put a significant down payment. Then, like you said, you don't need, if you've got $500,000, $1 million, we can use that asset depletion loan. Also, some programs nowadays, there's more and more non-qualified mortgages. The non-QMs are back. And
I would stay away from the non-QMs if you can. The higher interest rates, come along with those. But we've got a qualified mortgage, a QM loan that is an asset depletion loan that would be the going interest rates and, based on your credit score and everything like that. So, yeah, I mean, if that's something you're looking to do, we can certainly help you out and get you pointed in the right direction.
Hey, Mike, where would you buy in Florida? Where are you, an East Side guy? Where are you down there? Where would you be buying?
Well, her parents were in Fort Myers, so we're familiar with that area, but we're thinking about maybe going down there, looking around, maybe seeing if something, is better for us. But, we know a few areas, and we would thought about maybe just looking at a few more before we commit. But
right. The other thing is, do you own a house up here, I'm assuming, correct?
Yes.
Is it free and clear?
Yes.
Okay. The other thing you could look at if you're buying down in Florida is refinancing the house up here, taking some cash out. Because when you purchase down in Florida, based on
the intangible tax will eat you alive. Yeah,
the mortgage amount that you take out, you pay 55 cents per thousand on the mortgage that you take out as basically a sales tax for that, and that's on the buyer each and every time you refinance too. So it might behoove you to look at taking your assets from here and moving them down, or taking the money from your home up here and using it to purchase down there.
Mike, thanks for the call. Definitely follow up with you after the show, and we can always run some figures for you. Cost you nothing to find out what you're approved for. John, you mentioned it earlier in the show. We do all 50 states. I'm personally licensed just in Michigan and Florida. Florida is my second home. I love the west coast of Florida. I think it's great, but lots of opportunity down there because prices have dropped, believe it or not, in Florida and some other states most recently. So now might be the time, as everyone wanted to work remotely and they were buying up those Florida properties during the pandemic, 2020 through 23. Now they've got a saturation of homes out there, and we're starting to see prices fall back a little bit. And boy, oh boy, we've had such a nice fall here and such a nice year up here. I think if they kick our butts this winter, I think more and more folks might be looking down there. But those opportunities to get different types of mortgage and get yourself approved.
I mean, we're going to have a couple bad months of winter. It happens every year. But, I mean, look at my family lives in Arizona. Look at Arizona. I mean, it's 120 degrees out there, and you can't do anything for 4 or 5 months in a row.
I think my friend sent me a picture of her shoes melting.
Yeah, I mean, I remember my sister was coming in town a number of summers ago, and she was like counting down the days because it was getting hotter and hotter. And at 120 degrees, they close small airplanes from being able to take off because the tarmac is so hot. At 125, they shut down big commercial airlines from taking off. So she's like, if it hits 125 and we're stuck here any longer, I'm gonna lose my mind. So it's the same thing in these beautiful areas with palm trees that you have to deal with. You have to deal with 4 or 5 months of weather that you don't want to deal with.
I'll take the 2.5 here. That's why I love the state. You get all 4 seasons.
Right.
It's
we could have good weather
all
all the way to mid-December. And then, we've got crap until March. But
And occasionally a snow in May.
right.
Something like that. So definitely you can take a look at pulling the equity out of your current home, doing a cash out refinance on your mortgage up here in the Midwest or here in Michigan, and use those funds to be a cash buyer down on your Florida property. So now you've got two things going for you. Prices dropping in the South, and you become a cash buyer again. Not that much better, but that might be more interesting for a seller down there. But you avoid some of the heavier costs with the Florida mortgage, including the intangible tax.
Michigan is a very cheap state to mortgage.
To do a mortgage, yeah.
Compared to a lot. I do a lot of different states.
Why do you think that is?
It's just because of the fees. Different states have different fees.
Yeah, Florida doesn't have a state tax.
Florida doesn't have a state tax, so they charge every real estate transaction. They charge the buyer and seller. So even if you're refinancing your mortgage down in Florida, you have to pay that 55 cents per thousand. So on a $100,000 loan, it's an additional $550 that you have to pay in a closing cost.
All right, we always get this question, should I pay extra money on my mortgage? Well, you should overall sit down with your financial advisor and break all of these figures down. John, whether or not somebody wants to pay $200 extra a month, again, that amounts to $2,400 at the end of 12 months. That's easy math for me. How much further does it buy your principal down? Well, you can do that, and it does move you in the right direction. There's refinancing, there's recasting. So you got to really sit down and figure out what makes the most amount of sense for you. If you put that money away, John, in a Roth IRA or something of that nature, now that money's growing for you, tax-free, especially on a Roth. So different things you can do to prepare yourself, but having more smart people on your side is definitely the key. We have open lines just for a couple minutes left, 248-539-9797. Love to hear from you, John. Definitely starting to pick up some refinancing. Yesterday I was able to close a client who bought last year. The rate was over 7%. And now they're in the sixes. We also reduced the PMI, that private mortgage insurance, cut it in half. The monthly savings were $277. The costs were not outrageous. He can, if he stays there for a few more years, well, just 12 months, he breaks even. If he keeps the mortgage longer than that, now he's at $277 a month saving. More importantly, that cash flow is really important for a young family.
Yeah, absolutely. And that's, you said the number one thing, in my opinion, when you're thinking about refinancing is, what is my break even, right? How many months is it going to take me to pay this back? So if you're talking about a break even being 3, 4, 5 years down the road, you might want to wait, because we know that we're in a decreasing rate environment right now. So we might want to wait so that we can shore up that break even point and bring it a little bit closer to like 12 months, like Harvey said. And that way you're not losing if you go to refinance again.
All right. And, you guys are huge fans of Michigan. Brad, I love your enthusiasm because you moved back from the West Coast and you love Michigan. So that's a really cool thing. But definitely different repairs are required here in Michigan. So a lot of times I get that phone call and I just want to remind, you see it so often, I want to remind clients that you do want to save your house. It requires some maintenance. And this has been a theme of this year's show, was keeping at least 1% of your purchase price. So let's use that number. $300,000 home, you should at least be saving $3,000 a year to go ahead and put that away in case that hot water heater issue becomes, I need a new hot water heater.
It's always going to happen. I mean, as a homeowner, it never ends. I mean,
there's maintenance.
Hopefully it's not, every year, tons of money, but I just had to put a new garage door in my house. I did a new deck a year ago. I had an air conditioner and furnace a year before that. I mean, it never ends. So you have to plan accordingly.
We always use the math, right? Every 10 grand is going to be about $65, $70 a month on a 30-year fixed payment.
Right.
So can you keep 10 grand in the bank for these, things that pop up? Because if you put that on a credit card, or you get, the Home Depot credit card, the payment's going to be
a lot,
10 times more than that sometimes.
22% or whatever that interest rate. Right.
So you want to make sure that you're putting yourself in a successful situation. If you've got, I always tell people, if you've got $50,000 extra that you want to throw at the house, but you don't know whether or not you want to keep it and do something to the house once you move in, then I always say, don't put it into the house just yet, because once you put it into the house, it's gone. You can't use it.
Right.
So are we coming up to the end?
That's it.
Oh man.
I know. We want to keep talking mortgages and real
it.
estate, but I do see Pat Caputo. He's on deck over there. He's on deck. The Toronto Blue Jays don't need anyone to hit for them. They beat up Dodgers last night.
Wow, that one inning was crazy. I think they scored like 9 runs in one inning.
Pat Caputo, he's going to share all the sports with you here. We got the Michigan State-Michigan rivalry, Detroit Red Wing hockey
Go
later.
Green,
We want to thank, thank you, Brad Resnick, for coming in. Berkshire Hathaway,
Thank you
Evan
for having
Partridge, the Warren Partridge team. They're always busy when you want to talk to professionals, definitely give us a call. Capital Mortgage Funding. We'll hook you up.
Come by Sunday and check out our open houses.
Lots of open
we'll
houses.
Get you pre-approved too. We got a good people to take care of that for you.
Alrighty, we'll see you next Saturday. Keep it here on 97.1 The Ticket.